Hi there folks. Now, one of the biggest questions that I get asked by the aspiring trader or people considering a career in trading for the first time is how much money do you need to start with? Can you start with just $1,000 or $500? And the answer is, well, yes, you can. That's one of the attractions that draws people into forex in the first place. But are you realistically going to be able to give up your day job, tell your boss to go and jump in the lake with just a $500 trading account? Chances are not. But does that mean you should be giving up on your forex dream? Well, the answer is no, it shouldn't. There are plenty of opportunities out there for someone that can prove themselves as traders. Have you got the emotional makeup? Are you disciplined? Can you manage money? Are you able to manage risk? If you can prove that you can do all of the above and more, then the opportunities are indeed vast for you in the form of the prop firm. Now, the prop firm or proprietary firm basically is a firm that will fund successful traders and basically reward you with a percentage split of your profits over time. It is indeed a great way to get a trading career started. Some of these firms will offer you 25, 50, 100,000 from the get-go once you can prove yourself as a trader. In my research to make this video, I saw a few out there. One was offering, in fact, an account of up to $2.4 million. Let's say, for example, that you pass all these challenges and now you're managing an account of, say, $1 million. Let's say you make a 5%, a realistic 5% in the month. That's basically a $50,000 profit. Prop firm might be giving you a 50-50 split, in which case you're going to be walking away with $25,000 for that month's work. Indeed, the opportunities are vast. We've got many members now inside our trading community that are now full-time prop firm traders. They've basically taken on our education, taken on the challenge, passed the challenge, and now trading big accounts of the prop firm money, making a decent living out of the forex markets because they can think like a trader. So what I want to do in this video is basically outline the different challenges, the different things to look for when selecting your prop firm. Now, I'm not going to mention the prop firms by names. Indeed, there are many out there. You can do that research in your own time. But I'm going to basically show you what to look for and the pros and cons of the different approaches and the different challenges that are on offer. That way you'll be better equipped to decide which one is more aligned to your style and indeed our objectives. Okay, so let's expand a little bit more on what exactly a prop firm is. Now, prop firms have been around for a long time. Back in the day, a prop firm basically wanted to see a track record, a verified track record of, say, your trading performance over the last, say, 6 months or a year or so forth. But in recent times, this industry has expanded massively. And now there are multiple prop firms coming to the market with a whole different business model. Basically paying a subscription, an entry fee, meeting some criteria in forward trading as opposed to past trading, and see if you qualify and so forth. So the industry has changed somewhat. Now, basically a prop firm is there to fund your trading if you have what it takes to become a trader. So indeed, it is quite a good way to get into trading, especially if you have limited funds for yourself, but you know you've got the trading skills. So what I want to do now is basically go through a few of the things that you should be looking for when you're evaluating your prop firm, deciding whether you want to actually go and try and work for them and trade their accounts. As I said, they're not going to be talking about individual companies. You can do your own research on that in your own time. We do have our community. Many of our traders are getting funded at the moment. You can always come over and chat to our traders or chat to myself and my fellow mentors inside the trading room, should you wish to. Okay, so the first thing you need to consider is the account size, basically how much money they are going to allow you to trade. Now, before I came on camera last few hours or so, I've been doing a bit of research on a number of the prop firms out there. As I say, there's quite a few out there now. They range anything from 5,000. I actually saw one out there offering it account size building up to a $2.4 million account. Pretty hefty account size. You don't start off with 2.4, but you build your way up on there. Personally, I reckon an account size of 50,000, 100,000 when you're starting off is really adequate, and you should be aiming maybe for an account size within that region. So don't get too perturbed if they're only offering you 50,000. It's most probably quite a good level to start at. Certainly gives you a good opportunity anyway. Second thing you need to consider is the trading platform. You may be used to trading certain platforms. You're going to make sure maybe that they're trading the MT4 or the MT5 platform, or other platforms you may be not familiar with. So make sure you consider what platform they will allow you to trade on. But also be wary of that. Be aware of the prop firms that may be offering their own platforms. I've read some reviews about that, and sometimes that they can be there, maybe manipulating the price and so forth. Remember, this business is full of people trying to take advantage. We want to make sure that you're trading with a prop firm that's not going to be taking advantage of you. I'm not saying you shouldn't be trading with them if they do have their own platform, but just be on your guard there and maybe do some further research on that. But if you are trading MT4, MT5, then of course maybe you want to make sure that they are going to be offering that. And allow expert advisors. I don't personally trade with expert advisors, but your trading strategy might include expert advisors. For those that don't know what that is, it's basically an automated program that buys and sells for you. If that's your strategy, you want to make sure that the prop firm is going to allow you to do that. If you've got a successful strategy, successful EA, make sure they allow that. Leverage as well, that's an important one. I saw pretty extremes here from 10 to 1 up to 500 to 1. Pretty big leverage there, 500 to 1. I don't think you should be trading leverage of 500 to 1. As far as I'm concerned, that's the sure, fast way to the poorhouse, even with other people's money. Blowing up accounts pretty quick using leverage of 500 to 1. I would say leverage 50 to 1 maximum, that's all you need really. A lot of them, I think standard basically offering about 100 to 1. That is absolutely adequate. I personally reckon you should be trading with a lot lower leverage, maybe even 10 to 1. But 50 to 1, 100 to 1 is absolutely adequate. I also think about the weekend news. I was looking at these as well. Some of these prop firms, they have restrictions, okay? And it's all about working out the restrictions and the viability of, whether you're going to make it work for your particular strategy. So you need to make sure that these restrictions aren't going to restrict your trading. So for example, a lot of them will say that you're not able to trade or keep your trades over the weekend. It means you've got to close them out on a Friday. Maybe that's not such a good thing if your strategy is maybe a longer term play and you need to keep them on the weekends and so forth. But some prop firms, they need to protect their capital as well, and there are events that can happen over the weekend that we all know can cause big moves in the market. So make sure that you know if they allow you to trade over the weekend, or keep your trades going over the weekend, and also trading the news as well. Okay, so as you know, throughout the calendar week, we have economic data released, retail sales, non-farm payroll, all that and the like. Some prop firms will say, you're not allowed to trade your trades over these data releases, over the news. Again, think of that in terms of your own strategy. You certainly don't want to be coming into any prop firm without having a strategy that you are trading and trading successfully, whether it's on a small account or on a demo account. You've got a strategy, yeah? Otherwise you wouldn't be doing this from the first place. It's just like gambling with other people's money. You'll soon get blown away with that and end up just losing on your memberships and subscriptions. So you've got to have a strategy. If your strategy is trading the news, trading the weekend, and your prop firm doesn't allow it, well, maybe you should be looking elsewhere. The initial payment as well. So how this model works basically is they will give you a certain amount of capital to trade, the funding amount, okay? And they will charge you initial fee to basically take a challenge. And more about that in a second. And the fee is normally related to other criteria, and not least the account size as well. If they're going to give you a $100,000 account, they might charge you more because their risk is greater on the initial subscription. So when I was doing my analysis, I had a look around. These are ranging really. $199, couple $100 was about the minimum I saw. I did see some more expensive ones up there at around $600. Again, check those out as well. Normally you pay more for the bigger account size and maybe more flexibility and in relation to these other things that you should be considering doing. But link to the account size is a pretty big one. Okay, so before you actually get funded, before they actually put money into your trading account, they basically have to make sure that you can trade. And there's normally two stages that they will go through. The first stage is the evaluation phase, and the second phase is the verification phase. Now, check out the times of these phases or the periods. So I think standard from what I was seeing when I was doing my research over the multiple prop firms, it's about 30 days. So they basically set you targets that you have to achieve within 30 days. Make sure that you can do what you say you can do, that you can at least trade. Certain criteria we'll talk about in a moment. Once you pass that, you move on to the verification phase, where normally they give you a little bit more time and a little bit more flexibility, which basically sometimes lasts, say, twice the size of the evaluation phase. So maybe if it's 30 days for the evaluation, then it's going to be maybe 60 days for the verification. So make sure you check those out as well. Some pot firms don't have any verification phase at all. You just need to prove you can trade in the evaluation phase. But again, check that out. Don't think you're just going to get in, start trading straight away and get paid. It's not going to work like that. So do make sure you are aware of these two phases. And in these two stages, or stages, they give you profit targets and so forth. Different targets that you met and different restrictions, different protection for themselves. The evaluation profit target, I think standard is about 10%. So you've got to basically make 10% in the first 30 days. Okay, bit of a tall order that. Some are less, some do offer less than that. So do go and check that out. You've got to make sure that you are able to do that. Is your strategy performing in your back testing, that you are able to make this 10% in the evaluation phase? Normally, from what I've seen, after the evaluation phase, the verification phase, the percentage that they expect you to make in the longer time period, the 60 days, drops by a half. So maybe 5%. Is the profit target in the verification phase. But again, these do change. These are just what I saw as a standard. I did see one of the prop firms out there offering just 8%, and then the standard, then the verification was down there at 4%. So much more flexibility in there as well. But that's all very well talking about how much you can make, but obviously they need to protect themselves. So they also have figures in here where they say you can't lose a certain amount of money. We call it drawdown. So they might have a daily drawdown. You're not allowed to lose more than X% or X amount of dollars in your trading on a daily basis. And if you do actually exceed that, if you lose more on a particular day, then they are happy to accept. Sometimes it offers 5% or whatever it is. Your challenge will stop and you'll lose your membership or your subscription that you paid in the first place. So make sure you are aware of that daily drawdown. But also they have a maximum drawdown as well. So that's as your account grows, it can't drop by a certain percentage. A lot of these are averaging around 10%. But again, watch the fine print on this, because it's not always as straightforward as you may think, because as these accounts grow and they start adding more money, the drawdown that they are allowing might be working from the new account balance as well. So you need to know exactly what your parameters are. So that's why you really need to check out what these daily drawdowns are and the maximum drawdowns and what they mean, because prop firms do vary in their calculation of these as well. So be aware of that. And the profit split. This is quite an important one, actually. I think it's one of the most important ones. That alongside the account and drawdown. I think those are the most important things you need to look at. But the profit split as well. So are they going to give you 50-50? I think that is at the low end of the scale compared to what I was seeing across the board. I saw the highs of 80-20. So one of these prop firms is going to offer you 80% of all your profits. And just take 20% themselves. That's quite a healthy split. But make sure you are aware of that. You don't want to be working your socks off and end up giving the prop firm all your money. So be aware of the profit split. But again, all these factors factor into the subscription, how much they want from you from the get-go. Okay, so be aware of that. And the growth plan. Okay, so most likely that they are not going to give you 2.4 million from the get-go. You build up to that as you reach certain milestone targets throughout your time trading with them. So check out that as well. For example, if you make 10% in 2 months, they might double the account. So if they start you off on say 25 grand and then you make 10% in those 2 months, they may make a 50 grand account, and as that goes. So check out the growth plan. That is very important. Ultimately you want to succeed, and ultimately you want to be trading a vast account size, and you want to make sure that the restrictions that they may put into that in terms of your growth aren't too prohibitive. So make sure that they've got a healthy growth plan, because if you are really good, you want to be trading the big bucks, and that's when you're going to get paid the big bucks as well. Okay, so let's just have a look here at the things I think you need to be aware of very briefly when you're checking these out, when you're doing your analysis of the prop firm. As I say, the prop firm platforms, sometimes it's been known in the past that the prop firm manipulates the price because their business model might be just to take in all these monthly subscriptions, and they basically want you to fail so they can just take your $400 or $500 and then reset you and off you go again. And it's been known in the past that some brokers with their own platforms, they've been said to manipulate, not brokers, but some prop firms have been manipulating price. I don't know how true that is, but be aware of that. I have seen that on a few of the review sites as well. Minimum trading days. Think about this one as well. Some prop firms say you've got to trade a minimum of 10 days in the evaluation period time. That may be good for you, maybe not good for you. I'm not too sure about that myself. I don't want to be trading unless I really see my own strategies align and my signals come in and so forth. So be careful of the minimum trading days. Make sure that is not too prohibitive. You don't want to be starting off maybe with a prop firm that says you've got to trade 30 days out of the 30 days. That's going to be a hard old slog. And also think about the number of trades as well. Some of them say you do need to make a certain amount of trades. You can't just place one trade in, fingers crossed, and hope for the best. Be aware of that. Remember, nothing wrong with these, but make sure that it aligns with the strategy that you are going to be trading. As I say, you've got to have a strategy. You can't just be going out on a wing and a prayer, taking buys and sells, hoping it's going to work. You've got to have a strategy to be in this for the long haul, and you will know yourself if the minimum number of trades is going to work for you. So do take that into consideration when you're deciding. And also look at the withdrawals as well. How often are you going to get paid? Is it once a month, twice a month, once a week, and so forth? Because obviously, as your account grows, you want to start getting paid. That's obviously why we're doing this. So check that out as well. Not much more to say on that, and make sure you are getting paid as well. If you try for your first withdrawal and you don't get paid, then you maybe know, it maybe gives you an indication that maybe they're not as level as maybe they should be. And lastly, let's look at the reset fee. Now, a lot of these prop firms, their business model is to basically churn all these members coming in, all these customers coming in, basically taking their subscription, hoping they're going to fail, and just taking the money. And then they charge you again to reset all the numbers, and off you go again. Some of the prop firms operate like that. That's how they want to make money. They actually want you to fail so you keep paying again. Not all of them, but you do need to make sure you do your due diligence on that. Some prop firms I've seen actually give you an incentive. So if you do fail, they may reduce the subscription fee to go again, to give it another go as well. Chances are they really want you to succeed as opposed to just churning away on those new members. So do check out the reset fees. Some of them will give you a free go as well, for what I understand. So again, you need to check that out. But above all, I think you do need to do your research and check the review sites. There are plenty of reviews out there on the regular sites that we all use to check our stuff. Check out the reviews. There's plenty of information out there online with all the prop firms offering their ways. Don't take them for given, because there are some sharks out there as well that are just wanting to take your money and basically may not even pay you out in the long run. Not all of them, of course. It is a great way to learn the trading career, a great way to start making a career out of trading, start earning a decent income. As I say on the intro there, imagine trading $1 million trading account. You're making a realistic 5%. That's a 50 grand. They're paying you 50-50. It's a 25 grand a month income trading someone else's money with no liability to yourself. So it's a great way if you pick the right prop firm. As I say, we've got many of our members inside our trading room. We're teaching them all the time, getting them to pass these challenges for the prop firms. You can come over, discuss it with us, discuss it with our members, and share some ideas. But I don't want to talk about the actual names of the companies here on this channel for obvious reasons. But we're certainly here to help you in your decision making. Okay, so I hope you found that useful. Hopefully you found it informative. So now, as you know, if you are starting off with a small capital base, it doesn't mean you should be giving up on the trading dream. There are plenty of opportunities for those that can prove themselves as traders. That's what we focus on inside our trading room, getting people to think and behave like a trader so that they too can pass these prop firm trader challenges. If you liked the video, give me a thumbs up. If you didn't, give me a thumbs down. Leave a comment as well. Let me know if you're using a prop firm as well, how you're getting on with them. Have you passed any challenges? Always interested to hear what my followers and listeners are up to. Don't forget to subscribe to the channel. If you don't already do so, you can hit that notification, of course. You'll be notified when the next video has been released. You can follow us on all the socials as well. As you know, we are streaming live around the clock, 5 days a week, up to 7 times a day, discussing trading opportunities and so forth. If you want to take part, come over. 7-day free trial. If you don't want to stay, you don't have to pay. But I'm sure you will love it. Either way, I hope you have a good week, and I'll see you next week.